Hello and welcome back to the channel, your go-to source for understanding the complex world of short squeezes and hard-to-borrow stocks. Today, we're diving deep into a specific stock that has popped up on our hard-to-borrow screener, TokenCat Limited, ticker symbol TC. But before we get started, please remember this important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show TC logo/chart. Let's get straight into it with TokenCat Limited, or TC. This company operates in the communication services sector, specifically within advertising agencies. With a market capitalization of $56.03 million, TC, through its subsidiaries, runs an omni-channel automotive marketplace primarily in the People's Republic of China. They also deal in electronic equipment trading, offer technical support, and provide consulting services, along with subscription and support services. Many of you might recognize it by its former name, Tuanqi. Looking at the recent price action, TC has seen some significant downward pressure. Today it's down 1.84%, over the last 5 days it's down 11.25%, and a staggering 75.82% over the last 30 days. Volume today sits at 221,900 shares, which is quite low compared to its 30-day average volume of 2,957,603 shares, giving us a relative volume of just 0.1x average. What is cost to borrow and why it matters? So, what exactly does it mean when a stock is hard to borrow? And why should you care? When you want to short a stock, you essentially borrow shares, sell them, and hope to buy them back later at a lower price to return to the lender, profiting from the difference. To borrow these shares, you pay a fee, known as the cost to borrow, or CTB. This fee is typically annualized. When a stock becomes hard to borrow, it means there are very few shares available for short sellers to lend. As demand to short increases, or the supply of available shares dwindles, the CTB rate skyrockets. This rate can often exceed 100% or even several 100% annually, making it incredibly expensive for short sellers to maintain their positions. A high CTB is a flashing signal that short sellers are paying a premium, either due to scarcity or high conviction, to keep their short positions open. Why this stock is hard to borrow right now. Now let's apply this to TokenCat Limited. TC has appeared on our hard-to-borrow screener for some compelling reasons. The annualized cost to borrow fee for TC currently stands at an eye-watering 921.6%. Highlight CTB: not only is this figure extremely high, but we've also seen significant CTB momentum, increasing by 21 percentage points over just the last 5 trading days. This rapid rise indicates a worsening scarcity of shares to borrow or surging demand to short. Furthermore, the number of shares currently available to borrow is incredibly low, just 4,000 shares. When you compare this to TC's estimated float of 7.5 million shares, it really highlights how liquid the borrow market is for TC. These metrics paint a clear picture. If you want to short TC right now, it's going to cost you a fortune, and there are hardly any shares to be found. Squeeze mechanics explained. So, how does this lead to a short squeeze? A short squeeze occurs when a heavily shorted stock rapidly increases in price, forcing short sellers to buy back shares to limit their losses. This buying action further pushes the price up, creating a snowball effect. In TC's case, with a 921.6% CTB, short sellers are bleeding money just to stay in their positions. If TC price starts to rise even a little, the pressure on these short sellers intensifies. With only 4,000 shares available to borrow and an estimated float of 7.5 million shares, any significant buying pressure, combined with short covering, could quickly deplete the available supply, pushing the price higher. Our internal composite squeeze score for TC currently stands at 47.4 out of 100. It's important to remember, though, that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have strong conviction in their bearish thesis and are willing to pay high fees to maintain their positions. Dilution risk check. One critical factor to consider when evaluating a potential short squeeze is dilution. Dilution occurs when a company issues new shares, increasing the total number of outstanding shares and often reducing the value of existing shares. This can completely negate a short squeeze thesis, even if the cost to borrow is sky high, because it provides new supply for short sellers to cover or for new shorts to enter. The good news for TC is that our dilution risk check found no recent diluted SEC filings such as SMINUS1, SMINUS3, or 424B in the last 90 days. We also found no recent reverse split for TC in our look-back window. This means there isn't an immediate, obvious source of new shares that could undermine a squeeze scenario by flooding the market. Once again, please remember, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For Token Cat Limited, given its current hard-to-borrow status, here's what to keep an eye on. The incredibly low 4,000 shares available to borrow and the soaring 921.6% CTB are certainly noteworthy. However, we've also seen significant downward price momentum recently, with DC down 75.82% over the last 30 days, and today's volume is only 0.1x its 30-day average. For a short squeeze to gain traction, you would typically want to see sustained buying volume and positive price momentum. Show volume bars right now, the volume is extremely low. A significant increase in trading volume, especially on green days, would be a key indicator. Watch for any further reduction in available shares to borrow and continued high CTB. Remember, this stock currently trades at a low valuation with recent significant price declines, which could either attract bargain hunters or reflect a strong bearish sentiment among short sellers willing to pay those high fees. Token Cat Limited presents an interesting case study in the hard-to-borrow landscape. With an astronomical 921.6% cost to borrow, rapidly shrinking borrowable shares, and no recent dilution, it certainly fits many of the criteria that catch our attention. However, its recent price action and low relative volume suggest caution. Keep these factors in mind as you conduct your own research. If you found this analysis helpful, please hit that like button, subscribe to the channel for more deep dives, and let us know in the comments what stocks you want us to analyze next.